So hello everyone, welcome back to the channel. In this video, we are going to talk about SEBI new margin rules and about unusual or freak trades in the equity, futures and options becoming more frequent on the NSE. I am surprised no one has brought this topic up in this subject yet. Anyway, if you are unaware of what is happening, a couple of freak trades happened on Friday, 20 August, where the 37,000 PE of Bank Nifty actually opened at 1 rupees when its previous day close was above 1400 rupees and then quickly got back to its fair value in the split second. Next, around 2:18 pm on the same day, the 16,450 CE of Nifty shot up from somewhere around 100 rupees to make a high above 800 rupees in milli-fucking seconds. That it did not even get reflected on the charts at that moment, which you can actually see now on the charts in the daily time frame. And it even happened to trigger everyone's SLM order with a huge fucking slippage. By huge I mean 500-700 point slippage. Imagine going short at 100 with your SLM order at 120 just to find it get executed at 600 or 700 or 800 within a second with no fucking movement in the chart whatever. That is exactly what has happened to everyone that had short positions in 16,450 C after 2:15 pm, completely wiping them out of all their previous profits or hell even their entire capital. Feel really sorry for those that lost way more than what they could afford in this absolute fuckery. It could have very well been me as I trade Bank Nifty option 2, or for the record, no one is actually safe for such instances, be it a seller or a buyer or a positional trader or a scalper. What was the reason behind such huge slippage? Low liquidity. If there were enough bid quantity for every ask quantity and vice versa, there definitely would not be such freak trades and spikes unless and until it's clearly manipulated by any big hand in the market. And who actually profited from these freak trades? The institution and HFT firm obviously, which actually received data quite earlier in millisecond difference because of their infrastructure and a close proximity to the exchange, and they can punch order a lot faster, like in millisecond literally, which clearly shows that this firm were the one that had their order at all those level up till 800 as it all happened in a split second. Why no trade on September 1? Because our dear regulator, who is the name of protecting retail investors, will be removing all the margin and leverage facilities completely by 1 September, which was being done phase by phase from August 2020. This can potentially make the low liquidity scenario even worse and cause even more of such freak trades, which eventually lead to unimaginable losses to the retailers. Now you tell me, is this actually called protecting the retailers or making them go bankrupt? Even though a one day of protest might not really change anything, or it might, who knows. This needs to be resolved somehow and should not let it stay the same, because these margin rules are clearly bullshit and makes no sense in protecting the retailers, rather make it worse for us. Many trader YouTuber have made a video on this issue, so for more information you can search on YouTube and spread more awareness. As always, if you learned something new and found value, leave us a like to show your support and don't forget to subscribe and hit the bell icon to get notified every time we release new video. Until next time, thank you so much guys.